Assalamu alaikum. Good afternoon, everyone. Thank you so much for joining us today. This is Jawahar Al-Tamami. I'm the board secretary. We have Mr. Giri, the chief financial and operating officer. He will be presenting the results today. We also have Mr. Balaji, who's the head of investor relations. Go ahead, Giri, you can start.
Assalamu alaikum rahmatullahi barakatuh. Good afternoon to all of you. I'm also joined by our head of strategy and CEO's office, Mustahil Al-Mamri. We will cover our presentation as usual. We will keep it brief so that it is interactive. It gives you an opportunity to ask us any questions. So once again, welcome. So on the first page, you see a disclaimer. I mean, the standard caveat emptor really, and then we straight away go into our story, which you have seen in the past. Can we go to the next slide? Yeah. So in terms of the key messages, really, if you start from the right, so we celebrated our 50th anniversary since we spoke to you last. In February, we completed our 50 years. So we have well-established long-term relationships with the government and related entities. New senior management team, which this is all what you've seen in the past. No changes to the management team. We all are in situation and executing. The 5-year strategy remains the same. You know about the strategy, which is called Return to Prominence. I will cover that in the next slide, but it remains unchanged from when we spoke to you last. What I say is that the first half, now we've delivered for 2.5 years. That's half of the 5-year plan. The strategy execution has progressed well. We have gained market share in both loans and deposits after years of losing market share between 2016 and 2019. Key is accelerating the pace for the next remaining 2.5 years of our strategy. Then on the left side, you see that the economic, we do have a little bit of tailwind, fiscal deficit, all of that in a comfortable range, helped by oil prices. NBO has good access to stable and significant deposits from government and government-related entities. We continue to invest in technology to improve. If you see last week or week before last, mobile banking app was awarded again. And of course, all of that is not possible without a very strong shareholder backing, both in the form of Commercial Bank of Qatar as well as Sheikh Suhail Bahwan. And then we have a good relationship with the pension funds which own our shareholding. So that's the key message overall in terms of where NBO is positioned. I'm going to quickly talk about our priorities. These again remain unchanged. So if you can go to the next slide. Our priorities and the strategy itself is public. It's published, called Return to Prominence. 3 different priorities. One is safeguarding the assets, and this is a 9-pillar strategy as we call it. Liquidity, capital, and asset. We continue to be liquid. I think we talked to you last time. We spoke about the importance of being liquid and well capitalized and managing the price at which we get this liquidity. As our financial results say, we've done a good job in terms of managing the liquidity. Capital continues to be an important part. I come from a school of thought where the first thing I will talk to you is about capital and liquidity. We continue to be well capitalized with total CAR in excess of 16% and a CET1 just under 12%. Right? So we are 11.6. We are well capitalized and liquid, well above the central bank norms. Asset quality, we continue to focus on in terms of the risk that we book. Our NPAs are now below 5% for the second half year in a row. Good progress in terms of defining the risk appetite and staying focused on it. As you will see from the segmental information, we have increased our exposure to the ZRE segment. Then you look at the business model. We are focused on growing our revenue. Double-digit revenue growth is what we have delivered over a period of time of the 30 months of execution of strategy. Optimization refers to investing wisely, cutting out bad cost, and investing in good cost. Results again speak for themselves with a cost-income ratio now, due to addressing both revenue and cost, close to 40%. That is a significant improvement from where we started in our journey, which with the cost-income ratio in excess of 55%. partnerships both within the bank and with our key stakeholders, whether it be customers, regulators, or investors, continue to receive attention from both myself and the CEO. And in terms of sustainability, you see NBO's brand is more visible as part of our visibility efforts. You can see, somebody came into Oman recently and they said, "Hey, Giri, we see a marked shift in how visible NBO has become." I said, "Yeah, you see us more visible because we are confident of our performance history, and are more visible to our customers." As I mentioned, we celebrated our 50th year in February. Digital channels in terms of accessibility of ourselves and our services to our customers is what this digital channel refers to. We continue to invest in technology. Last but not least, we continue to invest in our people. That is a very important pillar for National Bank of Oman. That broadly is our strategy in terms of the 9 pillars. This is called Return to Prominence. It's on our website, and those are the areas, sets out areas that we are focused on. Let me go to the next slide and talk to you a little bit about Oman. I don't want to spend too much time on this slide. All of you on the call know these metrics better perhaps than I do. Clearly, we have a good position in terms of oil, the oil revenue, how that's helping us, and that being well received, that oil money being managed well or put to good use, and the repayment of debt, etc. All of that has been well received by the rating agencies. We all know the rating agencies' comments, which are set out in the slide there, in terms of the positive outlook by Moody's, S&P, and Fitch. Clearly, Oman's debt to GDP levels compared to similar rated peers, Oman compares favorably. Clearly, efforts to move the economy away from oil-related industry, clearly that again is working well. So this slide is again, you all know this slide better than we do in terms of Oman's economic positioning. Then the banking sector itself, clearly, again, well capitalized and liquid under the auspices of a strong regulator. You can see that now the 4 banks, which is Bank Muscat, Bank Dhofar, NBO, and Sohar, clearly dominate the market share space here. You can see some matrices around there. In the first half, clearly, banking sector recovering from the COVID-related issues, and all banks have improved their cost-to-income ratio, improved their return on equity ratio, and indeed, the return on assets, as well as the NIMs being, marginally up. You can see those on the slide there in front of you. The Sohar HSBC transaction concluded this month. Clearly, what we've been calling out in terms of consolidation, or the need for consolidation in the sector, panned out, and some consolidation indeed has happened, and which is real. From our perspective, we see the banking sector, our peers, again, well capitalized as well as being liquid. I think a strong financial services sector and a banking industry is a fundamental for any country's growth, and we have that in this economy. Let me quickly go through where we are and answer I'll give you a flavor of what we see is happening. Our story in terms of NBO, as I mentioned, the first local bank established in 1973. In February this year, we celebrated our 50th anniversary, which was well received by the market, our stakeholders, both regulators, customers, as well as shareholders. We employ 17 people, and as of 30th of June, our assets were at 11.7 billion. We 500,000 retail customers and 25,000 corporate and SME customers, including Muslim, which is the Islamic banking window. We have 66 branches, 203 ATMs. Outside of Oman, our presence is in Dubai and Abu Dhabi, and we are the legal closure. Egypt was formally closed in 2013, but the legal closure takes time, and that's what we're going through. The story in terms of the segments that we operate under. On the right side, you see a little bit about the shareholding and the table there, which sets out our financial performance. If you look at the financial performance there, H1 2021 versus H1 2022 versus 23. Then our assets have grown from $10.9 billion to $11.65 billion. Our net loans from 8.4 to 8.9, deposits from 7.8 to 8.5. But more importantly, if you look at the growth in income and the net profit, it's commendable. 171 million going up to 196 million. The net profit moving up from $57 million to $76 million. I covered the total CAR, which had moved from 15.3% last year to 16.6% this year. Loan to deposit ratio again coming down, showing our liquidity strength. The NPL ratio moved from 5.3 to 4.7%, and more importantly, our cost income ratio just above 40%, up close to 41. If you see 2020, which is when at the end of 2020, when the new management team started, you can see that progress there, right? The cost income ratio coming down from 54.6% to 40.9%. Similarly, you can see income for that year that itself actually was only 47 million. So good progress that we made through the year. Let me quickly talk for just one more slide and then pause for your comments and questions, then deep dive into any area that you might want. I've covered some of this before, but nevertheless, the first half, net profit was 76 million. It's a 32% growth over the corresponding period last year. Interest income from 148 million, which grew 21.8%. Cost income at 40.9% compared to 44.4% the previous year. Net impairment, again, making progress. Loans and advances, 5.5% over the same period last year. Typically, NBO has grown faster than the industry. During the first half of this year, we have taken some conscious calls in terms of our loan growth. It's not about just growth, but we also want to grow profitably. So if the margins or the credit quality did not suit our risk appetite, then we've shunned the growth. So maybe a little bit lower than what I would have expected, but that is conscious call. And customer deposits grew 8.7% with a healthy CASA ratio of just under 60%. And capital adequacy we covered at 16.6% overall, and to tier 1 being 11.6. That's in a broad level our story, right? It's about the next slide gives you the operating performance details, but what I'll do now is pause, given that the results have been out there for over a month now. I'll pause here and give you an opportunity to ask any questions of me and make it as interactive as you want. Okay. Why don't I pause here and open up the floor for any comments, questions that you may have, please. Thank you.
Any questions from the audience?
Good afternoon, gentlemen, and thank you, Giri, for the presentation. Congratulations on a very good set of numbers. We followed the NBO journey over the last many years, especially from the 2021 when you sort of laid down this new strategy, and we've seen great improvement in numbers. Just wanted to ask you in terms of the sort of challenging areas, not just for NBO, for the entire sector, interest rates sort of moving up. When I sort of look at a bank like NBO, which 40% has retail exposure, which is fixed at 60%, which is, I'm sorry, the interest rate is fixed at 6%, the lending rate. How have you sort of navigated the interest rate going up environment and still managed to maintain your spreads? So what's been the sort of conversation you've had with your corporate clients, and what do you foresee going forward as well when it comes to your projections on net interest margin? That's my first question.
Okay. Do you want me to go first, or you want to give me all your questions? Why don't I answer this question?
I think let's go one by one, right? Because otherwise,
we have time. Okay. So shoot. So let me answer the first question. Firstly, thank you for your kind words. Yes, we are making progress in terms of executing on our strategy. H1 results are a testimony of that, no question. Is the backdrop challenging? Absolutely. I was looking at some old correspondence, and March 2022, US dollar rates were, 0.8%, something like that. 10 or 11 consecutive hikes meant that the rates have gone up significantly, no question. We're all operating in that environment. And you're right to call out that retail loans are capped at 6%. I mentioned, and this is not new, when we did the full year results as well, Abdullah Zaran Hinay, our CEO, and I mentioned this. It's a question of what price at which you get liquidity and how you manage the liquidity, which is going to hold key for this year's performance rate. We talked to you about how we manage the business. So the CEO and I sit down with the business every week. And when I say every week, it is every week. Wherever we are, we try and dial into that meeting. My colleagues from the businesses are there. We go through what prices at which we are attracting deposits and at what prices we are deploying the money at. Okay, we are very careful about that. Week after week, we look at that like a hawk. The second thing that is helping us is that, where possible, so we do reprice. We've had conversations with our corporate clients where, so very rarely we would do a corporate lending which is fixed for a period of time. Yeah, that might be fixed for the first 6 months, first 12 months, yeah, maybe, but not beyond that. Okay, absolutely not beyond that. So I think one of the things that we are doing well is having those repricing conversations, educating our customers that the benchmarks are moving up, and therefore you should expect to pay higher rates of interest, right? The other piece that two other pieces I'll answer there is I mentioned this the full year presentation too. If you looked at this time last year, the CASA ratio is at 66%. What we were doing, we're paying slightly above for CASA deposits. So what we did was we let go of some CASA and we converted that into term deposits. We converted that into term deposits, and those are now stable with us. So there was a good strategy there to lock in when the interest rates were slightly lower. And, so that's something that we've done. Last but not least, I'd say that, repricing wherever possible, growing the CASA book and bringing in newer streams of deposits, whether it be through, our Sadara and, private bank customers has worked in our favor thus far. I don't want to give, as you know, we don't put out forward-looking guidance. All I would say to you is that we have some interesting challenges as the industry. The competition for deposits is pretty intense. Just this week, I priced a 1-year deposit at just 6%. I lost it to a fellow bank at 6.25. I repeat, 6.25 1-year money. So the rates are pretty high, but the person who's managing this very carefully is going to win the game, and that's what we are doing.
Wow, that's news to me. Now, if I just reflect, one of my questions you actually preempted. When I was looking at CASA ratio, it has actually come down from 21 and 65, 66, or to now less than 60. But if you look at your savings ratio, those are really the low cost deposit streams, isn't it? Just the savings sort of ratio. Now, I wanted to ask you your sort of strategy in sort of maintaining and growing that book in one. And second thing is, how do you view this the savings ratio opportunity in the line? There's an HSBC merger with Sohar that's finally been effected. Do you feel like those clients are up there for the taking? Is there any sort of concerted endeavor to sort of target HSBC clients and feel like they could jump ship? I'm just wondering, do you see this as an opportunity, or you feel like it's a non-event for you?
No, it is an opportunity. Look, look, when another bank is focused on getting their internal issues sorted, a merger is not easy, right? Will come with its own challenges. If at all they are busy with that, then that's an opportunity for the other banks. And what can differentiate one bank from the other? It's a straight vanilla product, isn't it? A savings account is a vanilla product. It's there since probably before we were born. But what is the opportunity there? It's about customer service, referral. So, and I've said this before, we are a national bank. We are the only bank which has got the national bank tag, Bank Al Watani Al Omani. So that does, we're a well-liked brand. So it does help in moving some customers. I will be, without giving away too much, I will say to you that we're very pleased with what we've been able to achieve as a result of that, and attract some newer clients to us. particularly the multinational, the guys who are banking with HSBC, then look for a stable bank, then comes in, oh, National Bank Oman. So, contacts, referrals, etc., help us in this space.
Sure. And I have a bunch of questions, but let me restrict myself to one more and then not be rude and give my colleagues the opportunity to ask you.
Sure.
One of the very interesting things I've noticed, and this is kudos to you and your entire management team, is something that we very closely track is a restructured book, restructured loans as a percentage of overall loan. Now, NBO is an absolute standout on that metric, because I'm kind of trying to link this to the cost of risk as well, because one of the worries we had for the sector is, there was a bit of hand-holding from the regulator when the COVID crisis happened, as it should be. A lot of the loans were deferred, restructured. But when I look at your metrics, only barring HSBC, and HSBC was another mindset when it came to lending in the country. But you guys are an absolute standout on the restructured loan metrics. So, here I would love to hear your view in terms of how do you, because at the end of the day, it's still an insular economy with 10, 15 large borrowers who bank with everyone. How is it that you stand out on these metrics against your peers in such a massive way? And if I can link this question to the cost of risk that you see for this year and, sort of evolving in the next 2 to 3 years, where do you stand as a bank and how comfortable you are with your sort of risk profile of the bank?
Yeah, great question. So we've taken the lead. You're very right in calling out the performance in this area. It's been stellar, but I don't want to mention specific names. There's a big steel company, which you know about, where we played a big role. We've really focused on this area. We have absolutely, it's this, that whatever we focus on grows, isn't it? That's a rule of life. Whatever we are focused on typically ends up growing. So we have been very focused in this area to be able to grow, to be able to address the restructuring within the timeline stipulated by the central bank. That's number one. Second is cost of credit. If you look, I know that you followed us for a long period of time. If you looked at pre-crisis, once upon a time we were at 7-8 bips in terms of cost of credit. That was not a sustainable level. Then during the pandemic years, we went up significantly. Then we've come off now. But I've told you the approach that the CEO and I take. We're not here to manage the bank for a quarter. We've got a 5-year strategy. We're executing on that. There may be some ups and downs. There may be a day when I'll have to have some difficult conversations. We'll do that. But one thing that we're not going to compromise on is how we account for. Therefore, you don't see surprises in our financials. Now, I've been here 10 quarters along with the CEO. You don't see us giving you surprises, right? We manage it. And our approach to provisioning is that we will be prudent. Neither are we going to excessively provide, nor are we going to be not provide, right? We're not going to be aggressive with provisioning numbers, neither will we be overly conservative. We'll be prudent. And that's what you see now, 40, 45 bips or 50 bips closer to that mark in terms of the cost of credit. I think that's a very reasonable number. We are not in a particular hurry to see that come down, because the global environment is still pretty unclear, right? With interest rate going up, we just talked about interest rate. How many businesses in the country, especially the SME businesses, can absorb this rate of interest of 7-8% or 6% even, right? So we have to be careful in terms of how or if at all any thirst to lower the cost of credit, then we need to be careful. So we're not chasing any particular metric there. Balaji, do you want to add anything on the restructuring, please?
So we talked about it even in one of our previous meetings where when these are still under the deference. So what we see here is that it is also available in our disclosures. Is not all exposures that have actually come for these deferral were turned out to a restructure. So many of them have gone back to their original terms, and they say that we no longer need any deferrals. We're not even in need of a restructuring, so we wanted to go back in our own terms. And where the restructure happened also, the banking community took some time, because initially CBO come up with the deadline of restructuring before 31st December 2021, but eventually that date is actually pushed to September, and finally it was November 2022. So this gave actually a time for us to do an effective restructuring, not for doing it for the sake of it, and have clarity on the cash flows of the customers. And also, if you notice the segment that are up for restructuring, our share to those segments are quite less. Actually, name a few are like construction, where our share is quite a low in terms of total gross loan by sector. So in that sense, as it turns out, our ratio of restructured portfolio as a percentage of total portfolio is low. So that is something which...
Yeah. So that's how we answered that question. Hopefully we could give you a little bit of a flavor of what, how we've achieved it and what to look forward to.
Sure, thank you. And I'll just wait my turn in queue for a few more questions that I have. And thank you very much for the opportunity.
Thank you very much. Can we go to others?
Any other questions?
Wait for a minute or so before and give others an opportunity to ask us questions.
Joyce.
Hello.
Yes, please.
Gentlemen, good afternoon. Thank you for the presentation. Just a follow-up on the asset quality. What I'm seeing is your bucket 2, tier 2 loans are coming up as compared to the tier 1. Tier 1 has come down from 78% to 73%, but at the same time, the tier 2 has gone up to close to around 20%. So, and when we combine this with the restructuring and the potential for restructuring, how do you see this panning out? Will there be any further increase in the restructuring or restructure accounts, or do you expect this to maintain these cash flows? The cash flows of these companies are stabilized.
Yeah. Hey, Joyce. Good afternoon. How are you? So let's get Balaji to share a little more color on the movement between the different staging, and then I'll come back and give you my thoughts.
So in terms of the staging by itself, the classifications are mainly one due to the restructuring or days past dues. The past due is one of the reasons. The others are purely qualitative in nature, where you see some weaknesses in the businesses, but the servicing is quite regular. You still mark them as restructuring, mark them as stage 2. I'm sorry. Just in case to put them in the watch list to have a closer look on those customers. So what we understand is that that is more effective. Okay, on a qualitative basis, assessing a customer as a stage 2, and then work closely with them and then identify the problem even before it comes. Okay, so in that sense, that being going up is only reflecting our the close review and monitoring of the accounts, and the restructuring of any portfolio is mainly depend on the cash flows that has been envisaged by the customer at the beginning of the loan agreement vis-a-vis the current. Okay, so in that sense, any customer who is fairly differ from the cash flows that he is projected at the beginning of the project is what is going to be coming out for a restructuring. It is not up to the banks to predict anything here. Okay, but as we see in our risk management practices, in our credit risk policies, we keep close look on customers based on various metrics. Okay, various qualitative metrics as well. So that amount going up is purely from our risk management perspective on how much exercise, how much the review that we are exercising on those big portions. So that's about it.
Okay. So from my perspective, before we ask Joyce to see if you've responded, yeah. So Joyce, listen, I think it's about the proactiveness that Balaji displayed in terms of how we are approaching this. and take that in the context of the other question that we just had about our role in terms of restructuring. We have played an important role here in terms of being more proactive than what we were expected, and I think that's a deliberate call on our part to ensure that we preempt any issues that may potentially come up. Hopefully, we've given you some color, Joyce.
Thank you, Giri. Thank you very much.
We'll take a question from Ustad Jassim Hamdan. تفضل.
السلام عليكم جواهر.
عليكم السلام، كيف الحال؟ شو اخباركم؟
الحمد لله، مساكم الله بالخير جميعا. Mr. Leader, good heart. I mean, it is. I'm really pleased to join you people here. But unfortunately, I mean, normally, I mean, this kind of meeting, from my point of view, is chaired by one of the Omanis. I mean, seniors. It is more, like we feel. We are pleased, as we are proud, to be Abdullah is well, what's it called. I hope that he is having some successor. I mean, you are really respecting Mr. Leader, but to an Omani, to see an Omani cheating is always, and also talking in Arabic, it will be easier for others because we have all analysts are expat, and myself joining this meeting the last probably this 6 months for the last few companies, only to be joining. I mean, to just give an example to our young generation to just join this meeting and to understand what is happening in the what you call it, the economy sector, whatever, all these companies, our public company. That's my intention. And sorry, probably my English, it is not that proper finance, whatever, but at least I think we can understand each other. Wish you, all of you, the best, inshallah, and NBO and other also banks. My first question, NBO, I've been, you have joined probably the last before 3 years, but I was following because I have got small shares in this bank, and I was following the previous management, previous board of directors, and there was some in the annual meetings they were putting some really advices or not advices, whatever, some joining them to from my point of view, one of the issues was MBO, I think, in Abu Dhabi, 5 years back. The portfolio of the loans was really, in 1 year, they were, going up.
Sorry, Ustad Jassim.
Has gone and reduced the.
الصوت اتقطع شوية، إذا بس ممكن تعيد آخر شيء. If you could just repeat the last few seconds. We lost you for a few seconds. You were discussing the UAE portfolio.
Yeah, whatever. That's been a long time now. I think the management, Abdullah and the new call, they have done extremely. It's the banking sector, but people have to take care of this to manage how to manage this organization in professional ways. That was one of the issues long time, which is I raised really. My intention to ask you guys, I mean, now what is your strategy? Because the economy, our economy is, alhamdulillah, is getting better now because of the petrol pricing, and inshallah things always will go in a better way. Banking sector is very competitive, so it is not that much, loans, whatever, deposit is very difficult to with a very difficult what you call this competing. So for the last probably 5 years, you have done an approximate of 100 million increase in your portfolio of loans or fixed or deposits, which is mainly in fixed deposits because your saving, I seen it, is which is very good for the banking, because although there was no pricing now anymore, but only the service is very important. So what is your for the next 5 years? Because from my point of view, like now what we have seen in Bank Suhar and SBC, they're joined together. Although there's some difficulties in some banking areas, but MBO now for the last 2 or 3 years, you are clean everything. Nearly your portfolio is getting better. Your loan portfolio, whatever, probably in commission income, you have to do something good in either to make your profit better. So my intention that is the NBO management or and also the board of directors have the opportunities of how to increase their business plan in future? That's my question. I mean, branches more, or are you going to give, because opportunities really is there now. Somebody had to catch, because like what happened in Bank Al-Ahli and Bank Dhofar and the Omani Omas, they are everybody trying to get the good chance. What has happened, it is the central bank rule, whatever they have seen the best thing for the economy. But I think NBO is one of the best banks we have. And, all this is finished now for the last 2-3 years. You have done a great job, I think, for the management or the board. So is there any opportunities to take this, any thinking that to take these opportunities, merger, it's really amazing, thinking they should, because, normal increase, it is not that much will affect or to make a good effect on the performance of NBO.
Okay.
I hope I am getting.
Shukran, Sheikh Jassim. Good afternoon to you. Thank you for your kind words. So firstly, as you call out, we have a clearly defined strategy now, which is a 5-year strategy, which I shared with you. We are executing on the strategy. 2.5 years done, we have executed well on the strategy. So that's the first point I would say, right? We are growing, and all the numbers reflect that. We take very balanced view of risk. We have a clearly defined risk appetite statement. And if you look at the loan book and where we are growing, we've grown in the GRE space, right? So we're doing well. Now, it is important that any growth that we do is also in line with the socioeconomic responsibility that the bank has, and also in a profitable manner. So our organic growth is focused on that, right? We are very focused on that. Your question was, would you consider any inorganic effectively? Yes, we will, but at the right price. It's important that the timing is right as well as the price is right. That's all is the answer. Are we open to it? Yes, but at the right time and at the right price. If you look at our financial performance, we are working very hard to deliver on an organic basis, right? You yourself saw how we've addressed the risk quality, how we have grown revenue, how we have grown cost, etc. So we've done well. But, it's important to make sure that whatever we do is not done for the short term, but it is done for the longer term. We have now moved away from, looking at the numbers every quarter and doing things which are quite. So our investment strategy, all our actions are done with the 5-year strategy plan in mind. So that's the answer to your question. If you have come to our presentation before, usually the CEO is here, Abdullah is here. Today he couldn't make it. I also have a number of very good Omani nationals working with me. Just at this period, one of them had a personal emergency and had to leave today and was not able to make it to the call. So usually we do have Omani nationals who work for me in the finance function, in investor relations, helping me with the call as well. So next time you will see them, inshallah.
Yeah, Abdullah couldn't join us today, so he does apologize, but he is usually at these
calls. So we understand. Thank you for those comments as well. Shukran jazilan, Sheikh.
Thank you. Can I just continue for one or two, suggestion or whatever? Regarding also you have mentioned that your strategy now, the branches. Are you going to open branches? In the future, is there any plan to relocate some other branches, or do you have this already in your planning? In case you are not going for organic.
Yeah. So we've got 66 branches now combined with Muzan and the NBO put together. We constantly evaluate our branch strategy. Right now, we are in the process of that evaluation. Every year, we update our strategy and have those conversations with the board. Those discussions are ongoing, and I'm not able to share more details in this forum.
Just regarding the staff, normally this organization, we need to see, having some Omanis every year, at least 10 or 100 or 50. It depends on the size of the organization. What I noticed that, I was surprised to see that by end of June 22, you had 1,455 staff Omani. Your staff. Hello?
I'm at NBO's General Assembly.
Are Are you with me?
So-
Somebody is at.
Yes, yes.
Sorry, yes,
we can hear
continue,
you.
please.
Yeah, 1,455 on June 22, and June 23 they are decreasing. And instead, I was really surprised to see this because we are looking forward to this organization to take more Omanis if they need it. I'm not what to call this, but what is happening exactly? If you have an idea about it.
Yeah, sure. Just to be clear, we operate under CBO guidelines, and well over 90% of our staff across all levels are Omani nationals, firstly, right? So should bear that in mind. Number two is overall headcount numbers are dependent on the nature of the business that we do, whether we are growing, what we are doing, etc. Right? So one of the things that we also look at is digitization, where digitization of our services, right? Where we are using different technologies to digitize. So if the staff levels are purely dependent on business requirements, where business requirements are there, we recruit. Where there are no business requirements, we don't recruit. One. Secondly, where there are people who are naturally retiring. So there are people who are at retirement age, they retire from the bank. So that's what happened. That's how we manage the staff trend. So we recruit where we need people. And then where people naturally retire, they retire. So that's how we manage the staff retention.
Just to continue, thank you for your answer. For the training, I noticed you have done around 600 people you have trained. The training, from my point of view, should be in the future. That means I have some ideas in my mind. Probably I've already discussed it with other CEO. We have to give a really good training to our young generations. It's not only coming to the branch and what's it called. We have to feed them the proper knowledge. Even 2-3 hours coming to the bank. That's what we need, I think, in the future for all the organization, not only the banking, all the public company. They should take this training, and probably we can give them also small grant. It will help them. Probably they will come for 1 month or 2 months, 3 months, whatever. This is what the bank they see and how they can, help in this kind of things. That's one of the issues. Only also to let you know, while I was checking the stuff in the website of banks, I was surprised really. It is not to see the expat in NBO. They are around 172 is written there, which is, as you said, 10% of the total. But to see these numbers compared to other banks, I was really surprised. It's not the point that but we have, after 53 years, in finance, we have great. We should see opportunities being given to them. That's the only thing. And sorry for what you call this interacting. Probably it is very straightforward interacting. What we need to see, good organizations, good opportunities to Omanis. That's my intention. And thank you for being, talking to each other professionally. Thank you.
Thank you very much. Thank you. Shukran jazilan. Let's go to the other questions.
Awesome. We'll ask Vishen. You can go ahead.
Hello.
Yeah, hi.
Yes.
Good afternoon, Mr. Giri. Thank you so much for the presentation and all the answers so far. Just a couple of questions. You mentioned a bit earlier on the call, with regards to deposits, and you said that you had priced one of the deposits rather attractively at 6%, and you lost out by 20 basis points, if I'm not mistaken. Do you see most of the discussions regarding your deposit base leaning in this direction, or this is an absolute one-off given the current interest rate scenario?
Look, I think it's a temporary aberration. I would like to think. I think if you're on the other side of the fence, i.e., you are placing a deposit with the bank, you'd want to lock in at the best rates that you can. No? All right. You'd want to lock in at the best rates that you can. So I think there's a rush to lock in when the rates are high. And I think it's important to make sure that once the Fed rate hike cycle comes, I would expect to see some level of normalization in this.
Noted. Second is, with regards to, and we've discussed how sort of deposit is an important feature for the bank as a source of funding. Given the recent consolidation, or in general, given your strategy, one of the things you explicitly mentioned and you pretty much lived up to it is getting back on the map and getting that market share. So do you see sort of a rush for sort of capturing low-cost deposits because of one of the players leaving the market who was known to have a legacy of low-cost deposits, or is it something you think would just probably remain with the acquired entity?
I think, Bishan, look, whether acquiring or non-acquiring, etc., attracting low-cost deposits has to be a key of any bank strategy. All right, liability gathering, in my view, should never stop. Low-cost deposits, the bread and butter, right? Can we stop that? I don't think we should, and personally, NBO would not stop that.
All right, no, and just a last, I understand it would be more leaning towards forward-looking, so I don't expect an outright answer. But given where you are, at the midpoint of your strategy, and you've pretty much been extremely successful so far, one of the words we've heard from you, and rightly so, is prudence. Whether it's capital adequacy or whether it's dividend payment. And I take your point wholeheartedly that you'd rather be prudent and be consistent than be erratic and then sort of have to come back with other actions. At some point down the line, let's say over the next 2.5 years, I know it's forward looking, but if the bank has achieved what it plans to achieve, do you see a sort of uptake in your payout ratio from an investor point of view? Or is it just too early to discuss that right now?
I think it's a bit early to discuss that, and the dividend is a matter of the shareholder. So as management, I'd refrain from commenting on that. But our duty is to deliver value in our performance to all our stakeholders, whether it be shareholders, whether it be our employees, and offering the good value proposition that we offer, or our customers in terms of and the regulators. So our role is to do that. The dividend distribution and the payout is determined by the shareholders ultimately when they meet, right? Bit too early as well to project into 2.5 years mission is how I look at it.
And I completely understand. Thank you so much, team, and wish you all the best.
Thank you.
Thank you. Go back to Abbas.
Hi, Gary. Thank you for the opportunity again. Just a couple of questions that I had in mind is when I look at your Islamic banking division, now that's probably one business that you're a laggard. When I compare it to either your total loan book or if I compare it to the sector. So what's going on? Is there a concerted strategy not to focus there? You feel like there's a lower ROE proposition in this business? I would love to hear your thoughts on the Islamic business and why is NBO a laggard here?
Yeah, look, our Islamic window completed 10 years, Abbas, recently. I hope you've noticed that we've rebranded Muslim and aligned it more in line with National Bank of Oman, okay, as opposed to any other competitor bank. The logo has been changed. You see that we rebranded our 6 branches that we have for Muslim. Okay, I think it's good to do that. It's been an area where perhaps in the past not received as much attention. All I would say to you is that it is receiving enough attention to grow into a full-fledged Islamic window, and we should expect to see more progress in that area. I'd love to see more progress in that area over the next 12-18 months. Is how I'd say that, Abbas.
Right. And another thing that I wanted to talk about is, I've interacted with you and Abdullah in the past on these calls in person as well. And today you mentioned something interesting, which is a little sort of deviating from what we spoke about. I think the last time Abdullah and I spoke, he was very clear that, hey, listen, Giri and I and the senior management have been, given the reins of the bank to fix the bank, increase ROE. We don't want to be distracted by any consolidation. Our mandate is extremely clear from our shareholders. Today, albeit very, very lightly, but you open the possibility of some sort of consolidation at NBO's side. Can I hear your thoughts? Because last when I spoke, and it wasn't too long ago, you were extremely clear that consolidation is not on your mind. While it's welcome for the sector, NBO does not want to be distracted. Now, I have my own views on consolidation. I think it's great. And, why just stop at banking? You could possibly look at leasing companies as well, if it's sort of, supplementary to your business. So what has changed? What has changed from the last time we spoke?
I think, Abbas, thank you for asking clarification. There's no change at all, right? Even last time, we don't want to get distracted. That is why when you asked at that time, it was in respect to a particular transaction, and we said we don't want to be distracted. Okay, in respect to a particular transaction, I said we don't want to be distracted. We didn't want to be a third third force in a competing transaction and get distracted. Okay, but and look, you always keep eyes and ears open. Are we focused on delivering our BAU? 100%. That's how we are doing. Should a good opportunity arise at the right opportunity, which is accretive to the shareholder? Yeah, why not? We'll look at it. That's all I'm saying, right? Just be absolutely clear. We are not looking at anything now. There isn't anything on the table. Absolutely none. But all we are saying, and this is consistent, apologies if they didn't come across consistent from past message as well. The past message was in respect to a particular transaction, and our view was, we don't want a distraction now, and we don't want to put our arms into already what was going on. Right now, that still remains the position, right? If you ask me, there isn't a merger that's going on, but if there's a merger going on, will I put a competing bid? No, I wouldn't. But in future, should an opportunity arise in the medium term, we'll look at it. That doesn't mean we'll put in a bid, right? We'd be remiss of us not to look at it, isn't it? From a governance perspective. That's all I'm saying.
Right.
I hope I've left you.
Yeah, loud and clear. I hear you loud and clear. I had another question. When you took over the reins, you were very clear about your sort of, you want to get ROEs to a certain, healthy levels where you're compensating shareholders for being a part of the bank. Now we've seen adjusted ROEs. Let's not talk about reported numbers, because let's talk about ROEs after perpetual interest. I think it's in the best interest of everyone that we all only talk about adjusted ROEs. We've seen that inch up to 10%, which is a fantastic achievement in my opinion, given what the sector has been through. So when you sort of, because you've been sort of, handed over the strategy on a 5-year basis, you made it very clear you're not managing the bank for a quarter. When do you think you and Abdullah and the rest of the senior management has succeeded, given what you know of the sector? If we had this conversation 3 years from now, where would your ROEs, where you'd be like, hey, listen, I did an honest job, it's a good job. So, let's not talk about the next quarter. Where do you think is a good ROE target for the bank?
Once again, forward-looking, so be careful. You're drawing me into that. But look, let's be clear. And thank you. It's been an important metric for us to achieve in terms of return on equity, cost-income ratio, etc. But look, if you look at my cost of capital, I think, given the rating sort of outlook being upgraded to positive, etc., I think my cost of capital is still around 12%, okay, 12 to 13% range. In the past, I would have told you I estimate cost of capital at 13 to 14%, right? If I can cover cost of capital in this market with a capital mix, I think personally that's a good outcome, really, right? That's how I personally say. Again, no forward-looking guidance is possible, but if you ask me personally, I'd say a good metric would be to cover cost of capital.
Your cost of capital is higher than mine, so that gives me a lot of confidence looking at the bank now, because my cost of capital will be 10.5%. I'd be happy if NBO sort of makes me a total return of 10% for the next many years. So I'm happy to hear the cost of capital is higher than mine, but that's good news.
Listen, I mean, as I say, it depends on how each of us look at it. What does a shareholder expect to, on a risk-free basis, to invest in the current context expect? I think it's around the number that I had given you. But look, I think we've got a clearly defined strategy. We are well capitalized. We are liquid. We've got a clearly defined strategy, and all it requires for us, me and the CEO, in partnership with my management team colleagues, is to focus and execute, which is what we do.
Right. And Vishan asked you a question about dividends. My question was not so much about dividends, it was more about, again, going back to our conversation in the past, you said, I want to even in today's presentation, you said for you're an old-fashioned banker, liquidity and capital adequacy, that's where your focus is. Profitability will follow. And if I look in that context, and last 2 years, dividends have been low, you've built up capital adequacy, at the same time, you've increased ROE. No one's complained, stock prices have moved up, people have made some sort of return on their investment. Now, if I ask you, what's your targeted sort of CET1 and total capital adequacy ratio for the bank, where you feel you're comfortable sort of, maintaining that for the next many years? What's your targeted ratio, sir?
But we manage capital through something called as an ICAP document, right? Internal Capital Adequacy Assessment Process, and that's shared with the board as well, right? We take into account two things: one, the regulatory ratios; two, where the Omani banking context is and how people are operating. If you look at both of those aspects, the current levels of capital are good. I would think anything above 16% in terms of total CAR is a good number to be it. And CET1 around 11.5% to 12%, 11 to 12% range would be a good number in terms of, generating shareholder, managing the risk, obviously, and also to make sure that we are rewarding our investors appropriately.
Thank you. Very, very clear. I appreciate that. I think in the consolidation question, I kind of slipped in the leasing company part. If that's a possible sector for consolidation, I think that's the only part that you sort of maybe missed out on answering in terms of what's your view on consolidating with the leasing company.
Look, I don't have plans, no comment really, because we're busy executing on the strategy numbers. With anything which is not a distraction is welcome. But then, you look at, you just talked about liquidity, the interest rate environment in the globe, and managing that and navigating that carefully. That's our priority, really.
Clear. Thank you very much. That's all I had. Thank you very much.
We just have a few more minutes to wrap up. We'll give Joyce a chance.
Thank you. The question that I have is on your bond, which is expiring next month. So, are you in the market for refinancing it? What's your strategy? And can you share some feelers on the pricing trends that you're receiving, probably if you're in the market for it right now?
Hi, Joyce. Thanks. Look, we having looked, as you would expect, been looking through what we can do. At this point in time, it would look like we would refinance it through internal accruals that we might have, like the other banks have done. But not to preclude a issuance in the near future should we have the needs for funds. We are always a believer to have diverse source of funding, and EMTNs are always a good one. We were in a trip to meet investors recently, and there is demand for Omani paper, right? There is demand for high quality Omani paper, which is always nice to see and hear. So we are cognizant of that, but you shouldn't expect us to come in there before September 25th is when the maturity is. That's less than just about a month, less than a month away from today. So it's more through internal accruals and what cash generation we'll be doing. Pricing is always interesting. The bankers are always talking to us about pricing. I think the fact that the rating agencies are upgraded our outlook, and there's further expectations of improvement, then means that can be finely priced.
Fine, understood. Thank you very much. Wish you all the best.
With that, we've run out of time.
Yeah, so we've come to our book slot. I genuinely thank you for your participation and time today and those lovely questions. To sum up, National Bank of Oman has got a very clearly defined strategy on which we are executing. We've completed halfway of the 5-year plan. There's no changes to the strategy. This is published and it's on our website. Please do look it up. One of the things that the CEO and myself had given commitment was to hold these calls regularly and to engage with the investor community, which is what we are doing. I hope you enjoy these interactions as much as we do. To sum up, I say, we clearly defined strategy. We are well capitalized and liquid and executing on our strategy. We look forward to seeing you in 6 months' time. But in the meanwhile, if you've got any concerns, comments, or questions, please do not hesitate to contact myself or the investor relations team, and we'll be more than happy to respond. Shukran.
Thank you.